You're listening to Engage, the podcast for Delta pilots.
Today's guests, from the Retirement and Insurance Committee, Scott Bowles, John Doherty, and Dan Fusco. Here's your host, Ryan Argenta.
Welcome back to another episode of Engage, the podcast for Delta pilots. I'm here with the retirement and insurance team. This is going to be good. I've got Scott Bowles, chairman, John Doherty, vice chairman, and Dan Fusco, all of the R&I team. Before we begin, of course, I've got a disclaimer to read from our attorneys. Here it goes. This podcast does not constitute an official position or advice of the Airline Pilots Association or the Delta Master Executive Council. The information provided in this podcast does not and is not intended to constitute legal advice, tax advice, or financial planning expertise. All information and content presented are for general informational purposes only. End of statement. With that, let's talk about 401k. Scott, I want to go to you first. Overall, what does R&I do for the Delta pilots?
We cover all things as you'd expect in the retirement and insurance space. That includes some payroll functions. Those would be mainly deductions and withholdings that are associated with tax and insurance pieces. We deal with the retirement side as far as future retirement plans, current retirement plans, including the 16% defined contribution that Delta pilots receive. We have a little bit of a shared responsibility on profit sharing. We share that with contract admin. And so it can be fairly busy, but we try to provide a good service to the pilots. We do have 2 full-time benefits specialists that also work with us. So if you happen to reach out to us, you may get a response from either Satya Green or Sheree McBride, and they are fully qualified to answer any questions.
And they're full-time, non-pilot, quote, civilian members who are here for your help, your advice, information.
Correct.
Awesome. And then you have quite a diverse team as it is.
We do. We've tried hard to remove the single points of failure that tend to be on a team that focuses on retirement, where you might get folks who are closer to the end of their career than their beginning. So we're very fortunate to have some folks from almost every demographic group we represent in terms of 20s, 30s, 40s, 50s, 60s on the age curve, and both post-merger pilots, pre-merger Delta pilots, pre-merger Northwest pilots, et cetera. So that gives us a pretty good background to work on the various issues that tend to come up.
Normally we do this at the end, but how do you get a hold of R&I, or how do I get a hold of one of the specialists if I need information or have a question?
The DART system works quite well. That is a quick way that arrives at everyone's email at the same time. We are available via the switchboard. So 1-800-USA-ALPA phone number will reach R&I if you request it. And if need be, you can leave a voicemail and we can always go down that road as well.
Very good. Well, let's roll up our sleeves, get everybody involved. The first part of this segment is about the retirement aspect. A lot of questions, a lot of information to give, but let's start the 401k. What is the current 401k setup for Delta pilots? And then noting a recent change where there's some confusion about now the Delta contribution to your 401k, you can roll over, convert, you can clarify that into a Roth. Let's start there. Who wants to tee it up?
Well, we can start with the limits, first of all. $61,000 for calendar year 2022 is the overall limit. That's employee and employer limitation.
And that's IRS limitation.
That's IRS.
$61,000.
$61,000. And if you're over 50, you can add an additional $6,500. That part is strictly employee contributed. As I would imagine most listeners know, the Delta contribution is 16%. And that's not a match, unlike other businesses that is a contribution. You can contribute 0% to your 401k. The company will still contribute 16% on top of what you're already getting. However, they can only contribute based on your first $305,000 for 2022. If you're lucky enough to make that much money in 2022, you'll max out your Delta contribution when they contribute $48,800. That's 16% of $305,000. What pilots can contribute themselves, the 402G limit is what it's called, contribute up to $20,500. That could be either pre-tax or Roth. We can start getting into the back door as we move forward.
So just to break it down again, we're talking 401k. There's an IRS limit max of $61,000. That's between Delta and your personal contribution.
Right.
And then your personal contribution is limited to $20,500 for this year. That's IRS limited. That can change year to year. It usually does.
With inflation, usually.
Right. So I just want to set that up. I'm pretty sure everybody knows that, but let's get that going.
And just to add to this too, this kind of the building blocks approach. So we're going to mention some terms, some things like 415C and other types of limits like that. The terms aren't important. The limits are, but we're trying to get the general ideas across. And if someone wants a more detailed answer, we're happy to go into further explanation. But as Dan so eloquently pointed out, that 20,500 is the pilot's contribution. The difference between the 20,500 and the $61,000 would be company contributions up to that maximum.
Dan, you talk a lot about IRS limits and company contribution limits. Can you break that down for us?
Sure. Well, for 2022, the 401k limit for people under 50 is $61,000. And employers like Delta can make contributions up to this limit. However, they're also constrained to only make contributions based on an employee's first $305,000. So since our negotiated contribution is at this moment 16%, the most Delta can contribute to a pilot's 401k in 2022 is $48,800. That's 16% of $305,000. Now, pilots can also contribute to their 401k. If you're contributing via Roth or pre-tax money, that's called the 402G limit. And in 2022, that limit is $20,500. Now, you may notice that these maxes don't add up to the max. $20,500 plus $48,800 equals a total more than $61,000. Regardless of how you fill up your 401k, a pilot will start making spill cash after reaching $305,000 in income, even if they haven't reached $61,000 into their 401k, because it's illegal for Delta to make contributions on that $305,000 first dollar of income.
Okay. We're almost in 2023. So how is that going to change?
So these limits go up with inflation. You might have heard inflation in 2022 was quite a bit higher. So the 401k contribution limit for 2023 is going to be $66,000, and the income limit is going up to $330,000. So for next year, 16% of $330,000 is $52,800 for 2023. That's still obviously less than $66,000. So to max out your 401k, if that's something that's important to you, you're going to have to make a personal contribution either through Roth pre-tax or a 401a after-tax contribution, which is actually not subjected to that 402G limit, the $22,500 limit going into 2023. However, if you're going to make contributions that way, we strongly advise that you call Fidelity and have those automatically converted to Roth contributions, because you're taking after-tax money, putting in your 401k, and unless you convert it to Roth, you'll have to pay capital gains taxes on the dividends that you make on that money.
This is why we have the disclaimer.
Yes.
This is tricky. This is tricky stuff.
Yeah.
Okay. And so let me ask you this. If the company's contribution increases from 16%, let's say it goes up to 17 or 18% in the future, are they then allowed to contribute more than the $52,800 in 2023? How does that work?
Sure. So next year for 2023, the income limit is $330,000. If the contribution were to increase to 17% next year, then the total that Delta could contribute towards your 401k is $56,100. That's 17% of $330,000. Still less than the $66,000 that you can put in your 401k, combined employer and employee.
And while we're here, what happens if you make more money and you fill up to that 61,000, but Delta's contribution spills you over the top of that 61,000? What happens to that money?
Great question. We put a lot of time and energy into that, but that's the 401k excess. It was recently changed from a paycheck about a year ago. But 401k excess is anything under 305 limit. Once you get above 305, it's 401k excess.
So what excess comes to you in taxable cash, right?
Yes. It's
Taxable income.
Yeah.
Okay.
Which then
Comes to you in your biweekly paycheck.
which is what the market-based cash balance plan is designed to catch that excess money. So if you get to the $61,000 combined, let begin to spill before you get to $305,000 of total income, that is 401k excess. Once you get to $305,000 of earnings and beyond, that excess is now called 401k excess plus.
You talked racing the company to the 415C limit of 61,000. Let's dig in there, because this is a point of confusion for a lot of pilots. And so the way I understand it is there are three ways to contribute to your 401k, right? So there is your contribution, which is up to $20,500 for this year. That comes out of your paycheck, and that is really up to you whether it's pre-tax or post-tax. Then there is the company contribution, which is currently 16%. That goes up to that $61,000 limit. And then there's another avenue that you could do a post-tax contribution in which you can contribute 0 up to 75% of your income into that pot. So now you talk about racing the company, and there's some disparity between when you talk to some more senior pilots versus some of the newer pilots. There's a change now where you may not have to race the company. Let's start there.
All right. Well, perhaps we can break it down. So historically, we've had the option, this being the last, decade or so, to contribute after-tax dollars to your 401k. In doing so, the recommendation would be that is contributed and then converted to Roth. So you contribute the money after tax. If you don't convert that money to Roth, then any future earnings on that money would also be taxed. However, if you contribute the after-tax dollars and then you convert those dollars to Roth, that does require an initial phone call with Fidelity. Those dollars are then considered Roth dollars, regardless of your income, different than an IRA where there might be income limits associated with a Roth IRA. Now you've got additional Roth dollars within your 401k. So in the past, you could essentially race the company to reach the $61,000 limit before the company filled it up with pre-tax dollars. And they're required by law to put that money in pre-tax. So this isn't something that was negotiated or anything else. That's just the legal requirement for the contributions to a defined contribution plan from the employer. So in the past, you could contribute after-tax dollars. Hopefully then you would convert those to Roth dollars, and those dollars would forever be tax-free in your 401k.
That makes sense because you've paid the tax through your withholding on the front end.
Correct.
And then it's Roth, so you don't have to pay. But now there's a difference. There's a change. What is that change?
Right. So one additional point on the last piece where this race was occurring, where you had the option to try to accelerate and get more of your own contributions and after tax and beating the company's pre-tax contributions. And that is that does require a phone call to Fidelity to turn that process on. During that phone call, you're also able to automate it so that all future contributions will automatically be converted to Roth upon deposit or receipt from Delta. So that simplifies the process greatly for the pilot and for Fidelity because they're not receiving the phone call every 2 weeks. Because what would happen in the past is some pilots would be concerned that if they were to deposit money in their 401k after tax, if they waited to convert that to Roth dollars, any gains or earnings on those dollars would be subject to additional income tax. So trying to avoid any additional tax on those earnings, they would call every 2 weeks religiously. And our Fidelity reps would inform us that they know the group of pilots that would call religiously. And they were always impressed, but also always burdened by this additional contact. It really wasn't necessary. So that process has been streamlined, and our next conversation may change some of the people's minds as to whether they need to do what they have been doing versus what is now available. So
I have a question. I've flown with a couple senior captains who've been doing this for years, and they explain, you know what, in the first part of the year, I put 75% of my income into this 401A to race the company. And I live like a pauper. I eat ramen and, I'm being facetious, but I mean, I live very lightly on that 25% of my income until that 61,000 is filled. Then I get the rest of my income back, and the company contribution comes back to me in that spill, that excess cash that you'll see on your paycheck, which is then taxed, and they can do whatever they want. Sounds like you may not have to race the company anymore.
correct. And this is where we get into the disclaimer about trying not to give advice, but we have been advocating for years that we would enjoy the opportunity to take the company's pre-tax DC defined contribution, 16%, and convert those dollars to Roth. So as of January 1st, this year, that opportunity now exists. You can convert any of the company contributions to Roth. This new opportunity comes with a big risk. And this is something that has to be the $1 million foot stopper that you need to understand. If you convert these dollars, this is a taxable event. So let's say that you decided to convert $10,000 of company contributions in 2022. When Fidelity sends out their tax forms in early 2023, you're going to get a 1099 for the 2022 calendar year, stating an additional $10,000 of earnings that were not taxed, nor were any taxes withheld. So you will have to satisfy that tax burden in 2023, looking back at the 2022 tax year. So that number can get pretty big depending on what you decide to do. So that's something we want people to be well aware of.
I'm just going to reiterate. So you can take the company's contribution, their portion or all of the 16%. This is still a phone call to Fidelity.
Correct.
You say, I'd like to take X amount of dollars, $10,000 from my company contribution, convert it to the 401k raw. That triggers a 1099 to come to you in the first part of the next year. And then it's your responsibility to pay the tax to the IRS, which is based on your personal income tax rate for that previous year, right? So if you're a betting man, which I am, you're wagering that the taxes you might pay now would be less than the taxes you would pay in retirement. And so you're paying the IRS now, you're paying the government now to avoid tax on the earnings and the initial. So if you take 10,000, you put it into Roth, that will grow tax-free as well.
Correct. And future gains grow tax-free as well. And then a side note, as you get into retirement, there is something called required minimum distributions, or RMDs. And these Roth dollars have the ability to not be subjected to RMDs in retirement. So it gives you some added flexibility down the road.
And so that's something you might want to talk to your financial planners, financial advisor about. You probably want to talk to your accountant or tax advisor about the tax implications of Roth versus not versus paying the tax now.
Correct. The difference we want to make sure we highlight is, in the past, the only option to get the additional Roth dollars was to try and accelerate your own contributions, to put those in before the company contributions. Now you have the option to maybe sit back and not contribute that limit of 75% of your income into your 401k, let the company contributions come in as they will. And when you get to whatever point in the year you feel comfortable, maybe later in the year, maybe earlier, that's a personal decision. It's something that you should consult a tax advisor or a financial planner on. Then you can convert those dollars all the way up until the end of the year. And at that point, you would generate that taxable event. But there's no need to race the company, because you're not going to be paying additional taxes on earnings of those dollars.
Okay. So you don't have to eat ramen for the first months of the year to race the company. You can actually live reasonably.
Unless you like the taste of ramen, in which case go not.
I mean, I love ramen, but not the cheap stuff that you buy at the grocery store.
Yeah.
And that may still be a sound strategy for some. We just hope this new opportunity gives people the choice to either do what we used to only be able to do, or now we can choose between the two. And that's something to consult a professional advisor about.
Let's zoom out again a little bit. So with that information now, how do you change your contributions to the 401k? Company gives you 16%. You might contribute an additional 10% or so out of your own paycheck. How do you do that?
Well, if you log into Fidelity Net Benefits, either through the Delta self-service, HR self-service website, or through Fidelity itself, most pilots, when you log in, will see the contributions page. You'll be able to see pre-tax dollars, Roth dollars, and 401a after-tax dollars. And that's where you can select up to a total of 75% of your paycheck into whichever one of those buckets you want. And for those over 50, there's a fourth option that has the separate above 50 catch-up contributions, this year 6,500, that you can also split into those 3 different buckets, however you like.
Okay. So through self-service on DeltaNet, Fidelity Net Benefits, I believe you can even Google it, just Fidelity Net Benefits. You log in with your username and password. Then there's a dashboard, contributions, and then you can change the percentage of how you want it.
And
how you
one
want
of
to do
the
that.
easiest ways to do that might actually be the Fidelity app, which is fairly robust, works quite well. You have the ability to view source dollars and where the money came from. And you can also change your contributions on the app. And then you can see it on the road quite easily.
That's a great point. We talked about SPIL, and we've already mentioned the market-based cash balance plan, which is fun to say.
Coming soon.
It is coming soon. And let's start there. The negotiators sent out a negotiator's notepad. They also did a podcast with us on an update. When we get the market-based cash balance plan, how would that work?
In a nutshell, the market-based cash balance plan was designed better than 6 years ago. And we were trying to find a way to solve this very first world problem, where we were fortunate enough to have the 16% contribution reaching the various IRS limits. And we were now receiving cash over the IRS caps, or SPIL cash, as we've sort of nicknamed it. And we're paying taxable income on our highest marginal tax rates of the year. So the market-based cash balance plan was designed to capture that cash and provide you with a tax deferred way to save those dollars for retirement.
Essentially, what would happen is the spill cash that you would receive now, instead of coming to you as taxable income in your paycheck, would go untaxed automatically into a separate account called the market-based cash balance plan. Maybe we'll come up with a catchier name for that one day, but it would be deferred income that you'd receive in retirement and taxable at that point.
In a lot of ways, a market-based cash balance plan acts like a 401k. So
it's like a 401k for your SPIL cash, which you're now taking as taxable excess.
when you withdraw it, you would end up having that tax burden then.
Okay. So it's something to also consult your tax planner, your financial planner about.
Correct. And a couple things on the market-based cash balance plan to be aware of. While the 401k is called a defined contribution plan, the market-based cash balance plan is a defined benefit plan. And so of that, it has some unique properties that not all defined benefits have, similar to the ones that were back in the pre-bankruptcy days that were either terminated or frozen at pre-merger Delta or pre-merger Northwest. So this plan is designed from the onset to be fully funded. And the survivability piece is there so that unlike a traditional defined benefit where once you and if you had a spouse were to pass, that money would go back into the plan. This is part of a pilot's estate, similar to a 401k. So that money would pass on to your beneficiaries, whoever that may be.
And because it is a defined benefit, it has to be professionally managed. That is the big difference between that and the 401k, where you can choose how you want to manage your money.
Okay. And then if I understand correctly, you can never go negative. You cannot lose money in the market-based cash balance plan. It can go to zero, but it can't go negative, right?
Right. There's something known as the preservation of capital within the plan. And so the participant or the contributor, the pilot in this case, would never receive less than what they contributed to the plan. So, and that's where there is a little bit of a risk in the early days when the plan first comes out and there has been no contributions to date. The plan could see a bad stock performance year and the plan could be a little bit negative, but the pilot is guaranteed that they will receive no less than their total contributions.
So if I get $10,000 of spill and it goes into the market-based cash balance plan and the market dumps and then I retire and I need to take that money, I still am made whole on that $10,000 contribution.
Correct. The further you are away from retirement, the more unlikely that would happen.
What other nuggets do you guys have? You were incredibly smart on all things retirement and insurance, which we'll cover, but give me a nugget. John?
Well, the HSA, a lot of pilots are using that also as another retirement vehicle, the health savings account. That's another way that you can put away $7,300 and save that money towards retirement. If you have medical expenses throughout your career, you just put down your personal credit card and save those receipts. If you Google shoebox HSA, there's tons of information on the internet on that. There's even some apps to track some of your expenses over those times.
The HSA is the only account that money goes into your tax-free, and if it's coming out for medical expenses, also comes out tax-free.
And grows tax-free.
And grows tax-free. The plan that we have, once you have more than $2,000 in there, that's when you can start investing. So it can grow. You can build it and grow it tax-free, use it for health expenses down the line, or reimburse yourself for health expenses once you reach retirement for health expenses that occurred at any point during the last 20, 30, however many years you've had an HSA.
So let me back up to slow this down. So we were talking about the Delta provided healthcare, United Healthcare that we're all familiar with, the gold or silver HSA. There's some other plans.
Health savings account.
Dan, you're saying once you've contributed over $2,000, you can then select an investment vehicle to invest those funds in.
That's right. I believe there are 8 different investment options.
And that money is contributed tax-free, it grows tax-free, and then you can remove it tax-free. The shoebox part of this is you put your medical receipts throughout your career, throughout your life, into a shoebox, a theoretical shoebox.
Maybe you can also scan it and keep it on a digitally also. And it is 2022.
Well, let's roll with the shoebox, right? For the boomers, we're trying to get that demographic a little higher. But so you put your medical receipts into the theoretical shoebox, and then in retirement, you can either use your HSA funds for medical purposes, or theoretically, you could reimburse yourself for and buy a big boat. You could reimburse yourself for medical expenses previously incurred.
And if you reach retirement and you need to withdraw money from your HSA and you have an account, you have a receipt from 20 years ago, I paid for this MRI out of pocket, not using my HSA funds. If someone comes and says, what are you using this HSA money for? That's not a health expense. I said, well, I'm paying myself back. I had this MRI 20 years ago and I paid for it with my personal dollars, not my HSA dollars. So I'm taking this money back for myself.
Yeah, take it out of your shoebox, give it to the IRS. The IRS says, great, thank you.
Exactly right. Can't touch it.
Cool. HSA, shoebox investment. Scott, what are some common issues that Delta pilots may face when it comes to retirement income sources? Seems like there's a lot of things, a lot of questions about, PBGC, military pensions. We talked K. What can R&I give as not advice, but information to Delta pilots?
Well, one of the first places to start, we have an R9 handbook that is on everyone's iPad. It's inside the secure docs. It's available on the flight deck. So should you find yourself somewhere on layover wanting some additional reading material, it's a great way to go to bed at night. That's a great source. It'll give you some points of contact within that to contact us. It'll discuss some of the high level overviews of both pre-merger Delta folks with the PBGC, which is, by the way, a direct relationship between the pilot and the PBGC. Delta and therefore Alpha are out of that relationship. So we can discuss some of the issues or things that might be going on, but that is something the pilot has to initiate contact to the PBGC since they hold the benefit. No longer Delta holds it. And that way Alpha doesn't have really any involvement in that directly. The handbook has some gouge on the Forward Northwest frozen pension, talks a little bit about TRICARE and some of the benefits of that, some of the things to be aware of, like how a TRICARE interfaces, or in this case, doesn't, with things like health savings accounts and those kind of insurance things. But to your question about what do Delta pilots typically face, or what are some of the common questions, I would say the majority of our early retirement questions, or I'm about to retire questions, are centered around insurance. What happens in the transition to Medicare? What about my spouse? If I'm married and my spouse may be older, maybe younger, and that has implications as to whether the spouse will be covered by Medicare or the spouse will be covered by some Delta health insurance. So those are some of the typical questions we get.
Okay. And that's impressive that R&I is there to answer those questions and to help. And it sounds like you're even open to talk to retired pilots.
Absolutely. We took quite a few. I think we spoke to someone today in his mid-80s, so he has been retired for a while.
Yeah. So you don't have to feel rushed or pressured of, I've got to get all these things in order and talk to R&I because of the day I turn 65 and walk out the door. I no longer have that support. The ALPA support is there. The R&I support is there. You can call when you're 80, 90 years old. That'd be awesome to call you when you're 97.
We also have a document that goes out every couple of years. It was just updated, refreshed, and should have hit the ALPA content locker this past week. And that's the approaching age 60. That's something that we send to about age 58, I believe, and older.
Yeah, it went out to everybody's 58 or older, but it is on our website.
And that just gives you things to start looking at, prior to 60 or 90 days before retirement. This is up to about 7 years prior, things to be aware of, from Social Security. Would you want to draw early or not? Life insurance thoughts, PBGC thoughts, the TRICARE issues as the folks that went through military service but didn't do 20 active and ended up with a benefit that's going to engage at age 60. Things like that are things that we'll discuss in the approaching age 60 document.
Awesome. Sounds like there's a lot of resources out there. We'll take a break here. When we come back, R&I talks insurance. I've got Scott Bowles, John Doherty, and Dan Fusco. Stay tuned. R&I coming back.
Yo, there go Mace, there go your cutie.
Engage Podcast wants to hear from you. Send us your questions through the MEC DART system at dart.alpha.org. You have questions, we want answers. You're listening to Engage, the podcast for Delta pilots.
I know you're thinking now when all the ball is stopped. You never home, gotta call me on the yacht. 10 years from now, we'll still be on top. Yo, I thought I told you that we won't stop.
Okay, we're back. Let's talk insurance. Guys, what insurance options are available to Delta pilots? And let's talk company provided and ALPA sponsored insurance.
Great question. Delta's got a whole suite of insurance products that are offered as part of your employment. You can choose from the account-based health plans, that'd be the gold or the silver HSA accounts. You can choose the copay option, which is more of a traditional preferred provider organization, or known as a PPO plan. And then we have the one Delta plan that is contractually held through ALPA, which is the Delta Pilots Medical Plan, or known as the DPMP.
Okay. And so if you have questions on the company provided plans, the medical stuff, the United Healthcare, can I call R&I and ask questions about that? Do you field them, or is that a more company specific?
A little bit of both. We are certainly happy to answer questions or assist you in choosing what might be the best plan for you and your family. The company itself is responsible for those plans and coordinates payment and prior authorization with United Healthcare and all of that. So typically you will contact the Employee Services Center first. You'll enter a claim number and they will work that issue with you. If you have issues with denial of service or a claim not being paid, that's often where we will see people reach out to us, and then we can try and work with our company counterparts who we fortunately get along really well with, and they're able to do a lot of great things to help on behalf of the members if there are issues. A lot of times it comes down to a provider issue where it wasn't necessarily Delta, it wasn't United Healthcare, nor ALPA, and it was maybe the doctor or the nurse submitted the wrong code and the code came back denied and the employee may not know why. And sometimes we're able to help straighten those things out.
Okay, very good. And so again, that is submitting a DART or calling 1-800-USA-ALPA, asking for the Delta MEC R&I team. That'll come to you or one of your specialists. Good to know.
On top of those insurance plans, there's also company provided vision and dental, which you do not need the DPMP or one of the HSAs to enroll in if you have TRICARE or some other outside insurance.
Okay.
Good point. And then following to that, of course, there's also the company provided life insurance. Part of that is a contractual life insurance policy through your relationship with Alpha. And then there is optional life insurance on top of that you can also opt for.
Gotcha. And that is all company provided.
Company provided the optional insurance, and a lot of the other health and dental vision insurances are something that will cost you money, but they are offered through Delta.
Okay.
So not provided for free is what I'm
Sure.
saying.
Yep. Understood. Paid options above and beyond what is contractually provided.
Correct.
Great. How about Alpha sponsored insurance programs? This is some blurred lines, but
Correct. So there are some Alpha plans that are available to our pilots. They have some great offerings as well. We typically see some of the dental plans are fairly popular. The disability plans are where we really see people take advantage of some additional coverage in the disability areas from Alpha. And that way, if you had, some kind of an unfortunate issue where you were out of work for a much longer period of time than say 12 to 15 months, you might have the ability to replace a significant portion of your income through those Alpha plans. So those are some popular ones. And then
what would those be called?
Alpha sponsored plans include the disability plan, a disability plus plan, and also a disability lump sum plan that are things that we frequently have discussions with our members about.
And that you can go to alpha.org, member insurance, and check out those options. Also reach out through DART or phone call if you have questions on those products.
Correct. And specific questions related to those plans are directed to Alpha National as opposed to us, because they do hold the relationship between those plans, the members, and the actual insurance company, as opposed to Delta Alpha. All of those are available through the Alpha National main splash page. You can get to your member insurance.
Okay. So alpha.org, look for insurance options, do your homework there, and then you can reach out and ask questions about that.
Correct.
We're not selling any products here.
Right.
Okay.
Alpha also has long-term care plans, some dental plans that we hear some of the retirees take. They also have a Medicare Advantage plan.
And then they also have a variety of term insurance plans.
I feel like pilots are heavily insured. Is that because of the nature of our business and it's just kind of a fragile system where we have to operate with a medical certificate and there's a lot of nuances that can remove that or at least take you out of active flying?
True. And I think, that it would be safe to say most pilots are insured more so than the average person. There is a certain concern when you have the fragility of that medical certificate and the things outside of your control that could maybe cause you to have a pause in your career. And then how do you backfill that income, which has been appreciable during that time? And how do you make up for that shortfall while you're out trying to get your medical back?
Yep, absolutely. Now, you've recently rolled out through Alpha an additional insurance program you're trying to market, not to profit from it, but you want pilots to understand that there's an additional option and an offering for them. John, why don't you tell me what that's called and what they're offering?
It's the accident critical illness insurance. It's been available probably 5 or 6 years, but
So not new.
it's a way that you could possibly insure against that high deductible healthcare, the HSA, those high deductibles. Say you break, in my case, I broke my ankle. I was glad I had that insurance. It more than covered my deductible.
An MCL on my end, and then numerous kids that have been injured. And that's something to be of note that with these high deductible healthcare plans, the deductibles are set high, not by Delta, but by the government. And they go up every year with inflation. And so one way to offset the potential pain of that high deductible payment would be to consider either the accident or critical illness insurance. We're happy to chat with you about it. But that also gives you the ability to consider saving in your health savings account dollars for something later in life. And since that is such a great tax trifecta with those HSA dollars, these are really interesting plans to consider. So if you have a child in sports, especially, I would strongly consider you take a look at this, because the likelihood of an injury that might result in this covering your out of pocket is fairly high. And maybe this is one of the better points to make, that if you are under 50 years old and you look at these plans, they actually have a wellness component similar to the Delta Health Savings Account dollars. But if you comply with the wellness component, it's a very easy application. You will actually be paid. I did not misstate that. They will pay you more than the premium for this insurance policy to take these policies. So again, if you're under 50, it's potentially free or better than free insurance.
So it's insurance for your insurance.
Correct.
This is
deductible.
an ALPA sponsored insurance plan through Voya is the name of the company that provides this.
Correct.
And so if I have, for example, I have the Silver HSA through United Healthcare through Delta, the company provided healthcare plan, I have a very high deductible, right?
Correct.
So if I break my arm, I've got to pay that out of pocket or use my HSA to pay that $5,000 bill.
Correct.
If I have the accident and critical illness insurance, which is ALPA sponsored in addition to, then they will cover my out-of-pocket expenses, potentially even more than my out-of-pocket expenses.
So like you said, it is insurance for your insurance. It's a little bit complicated in that respect, but because it allows you to know that your deductible would be partially or maybe even entirely reimbursed, depending on what happened to you, it may allow you to choose a less insurance option from Delta and know that you have some downside protection in case, for example, between the gold and the silver HSA at Delta, it's often commonly misunderstood that those are different plans or different levels of coverage. They're actually the same insurance plan. However, the gold has one family deductible. The silver has up to 3 family members, each having their own deductible. So having an accident and critical illness insurance policy would be a way to kind of protect that downside if you chose the silver plan over the gold plan.
Okay. Again, 1-800-USA-ALPA. You can get some information about this. You can call R&I. What about disability? Do you have anything, R&I have anything to do with disability?
Yes. Quite a bit. We field a lot of traffic and calls and inquiries on disability.
So all things related to disability or losing your medical, having to come back on, your R&I team can field those questions and help pilots out.
Correct.
Great. Thanks for that. What else do you have to sell?
Know that almost all the documents we've discussed are available in your ALPA folder on your iPad. So that's a great spot to look and see, and you can send a dart if need be from there. Otherwise, as Ryan mentioned, 1-800-USA-ALPA.
Retirement insurance handbook on your iPad probably explains things better than we just did.
Okay. So while you're flying along, it's in the folder on your iPad. Well, gentlemen, thanks very much. Scott Bowles, John Doherty, Dan Fusco, thanks for being here. Thanks for what you do for us. Yeah.
Thanks for having us. Pleasure.
This has been Engaged, the podcast for Delta pilots. Thanks for listening. My name is Ryan Argenta. Stay safe and keep the rubber on the road.
You're listening to Engage, the podcast for Delta pilots. Follow us on Spotify, Apple Podcast, or your favorite podcast platform, and receive notifications when a new episode is available.